Hello, investors. Thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I want to talk about Twitter, why I believe that Twitter is incredibly cheaply valued. So, we're going to talk about its growth rates, we're going to talk about its financial targets for 2023. We're going to talk about the share repurchases, we're going to talk about its path to profitability. Finally, we're going to talk about its valuation. So, got a lot to get through. I'm going to just jump right in. So, look at Twitter, right? So the past 6 months, the stock has just been obliterated. Unjustifiably, the stock is down 40%, and anyone who's kind of involved in Twitter, you're gonna feel really bad for yourself. There's just no denying it. It's so much easier at this stage just to kind of exit out the position, start 22 clean, come in, fresh portfolio, get rid of those memories. But ultimately, when everyone's thinking like that, you have to kind of think to yourself, okay, what is the value proposition here? And you have to think to yourself, okay, is it more exciting now at a lower price, or was it more exciting when it was a higher price? To me, this is like, I feel that it's like no brainer because I feel that ultimately we're so much closer to their 2023 financial targets of 7.5 billion in revenues. But anyway, I jump ahead of myself. So when you peel back, so there's a lot of different kind of noise in the community that Twitter's kind of user growth is kind of slowing down, but it's not so much, in my opinion, really about the user growth. Okay, it's more about the engagement. So if you drive engagement, you're going to drive more time spent on Twitter. But it's time spent on Twitter. It's not just kind of scrolling. A lot of people, it's really about engagement and interacting with that. And when you add interaction, you're able to really drive the marketing dollars because the more engaged the person is, the more data you're accumulating on the user, the more the marketers want to really, the brands and the advertisers want to be able to reach that user. And that increases their return on investment. So it increases Twitter's ability to raise prices. And this is something they're going to really be able to see as we go through. It's that, so this is the formula really: more engagement, more ROI for advertisers, more advertising dollars, more ad revenues. Okay. So, they put out their guidance for Q4 to grow at approximately 23% year over year. Now, think about it, right? Q4 of last year was their strongest quarter. So, to come up against that heavy quarter and to be able to still be reporting some growth, I think that's really, really compelling. It's just, Jack stepped down, Parag stepped up, and they came out straight away and reiterated their guidance. 2023, 7.5 billion in revenues. I think that, and a lot of people kind of like, oh, but there's a privacy changes from Apple, etc., etc. And they talked about, so the revenues, they talk about on the earnings call, the revenue impact we experienced from app tracking transparency in Q3 increased sequentially, but remained modest. So, I mean, like a lot of people kind of just XYZ reasons for fear. And if a person wants to sell a stock, they'll find a reason, man. There's no reason to kind of, you don't have to kind of scratch around. There's plenty of reasons. Stock is falling, sentiment is negative, whatever you want to call out. But if you actually take a step back and you dissociate from the share price, you see that revenue growth is still strong, particularly against Q4, and them being able to say, okay, so we're going to divest of MoPub. They're going to divest that over to AppLovin, and they're going to bring in approximately $1 billion in cash from that. And it's a business that is still robust. Twitter isn't going away. So this is something that I already alluded to a few times. So people say that, oh, Twitter's platform is outdated. It's outdated for a certain demographic. If you're a Snapchat user, yeah, it's not going to be for you. But look, they've put product innovation in tips, super follow, ticketed spaces, newsletters. It's like people are just, people are kind of building a story around the share price. This doesn't make a lot of sense to me. So when I think about it, right, so what they didn't do particularly strongly in Q3 was that the ad engagement revenues were only up 6% year over year. So, they kind of have to up their game there, but that's something that everyone already knows about. They're talking about moving towards direct response adverts. This is being able to target specific users, and it's obviously much more attractive to an advertiser to be able to target a specific user rather than just mass advertising and hope to hit somebody. So they're moving to direct advertising, and that's going to be really, really something that's going to be very exciting over the next like 12, 18 months. They also talked about just kind of scratching the surface there about talking about some e-commerce activities, being able to sell merchandise off Twitter. So it's still early days, but it's clearly they're not just kind of stagnating. They have products and they have revenue growth, and I think that that will soon transpire towards its bottom line. Now, one of the things that really kind of jarred at me was that if you strip out the litigations cost, the adjusted profitability was only 23 million, which was 40% lower than the same period a year ago. Okay, but you have to remember that right now they're back on the investment for growth period. They're investing in talent, infrastructure, data centers, building out ad support, really building out that whole infrastructure, but driving that product innovation. So you can't have it both ways. But when the fact of the matter is that they actually, for the 9 months of 2021, they actually reported that they bought back 915 million worth of stock. So if you kind of estimate that they're going to buy out another 50 to 100 million in Q4, that means that they bought out 2 or 3% of their market cap at least in 2021. So I mean, it's whichever way we see this, investors that are just willing to have a bit of patience, they're going to get rewarded, right? So here's the thing, right? Let's put some numbers to this. So Twitter's balance sheet holds 7.4 billion in cash equivalents, and then they already addressed that they got the Mopo divestment that's going to bring in another billion in cash. So this is offset by 3.6 billion of the convertibles. So you have at least 4.3 billion net of cash. People say that Twitter doesn't make money. I mean, Twitter has more cash on its balance sheet than some of its peers will make in revenues over the next 10 years. And Twitter is priced at figure that, 5 times sales. I mean, I think that this is really, really cheap. I think if just for context, remember that when Pinterest was being courted to be acquired by either Microsoft or PayPal, they were kind of both of them paying approximately 13 times their 2022 sales. Okay, so Pinterest is not quite as strong as Twitter. It hasn't got that level of broad engagement, but stock was going to be bought out at about 13 times 2022 sales, and at the time it was forward sales. So I mean, that's just give you reference points. When you're paying 5 times for Twitter, I think that you're getting a lot more. And Twitter has often been said, oh, they don't give enough visibility. They gave the visibility. They're saying that over the next 2 years, they're going to be growing at approximately 23% compounded annual growth rate. I think that's pretty compelling. So anyway, if you kind of just wanted the summary, the takeaway here is this: that this stock, however you look at it, it's absolutely cheap, right? So you have share buybacks, you have growth, you have profitability, and a cheap stock. I mean, I think that's pretty compelling. This is, for the interest of disclosure, a stock that I do own. And if you don't want to find out what other stocks I do own, don't forget to check out our marketplace called Deep Value Returns. And you can see what other people said, check out the reviews. And yeah, I hope to see you next time. Thank you for listening.